Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, for listening to us this weekend. Every week, if you tune in Saturday and Sunday, KCAA driving around, or you've got it pegged at home on some telestial radio station, yep, that's us. And we bring to you mortgage information. That's right, that exciting topic. Well, you know what? It's not exciting. You're right. But if you're buying a house, it is. And one of the things that is exciting is when rates drop. Although that did not happen this week, it will happen. And we are, along with a lot of other people, including many major economists around the country, are looking at long-term interest rates, long-term being this year, to maintain in the 6 to 7% range, probably in the high fives by the end of the year. Now, the reason that they say that is because inflation is taming and a number of other things about the economy are looking much, much better than they were a year ago. We'll get into some of that anyway. I am Jeff Barton. If you want to see and hear this show, as well as many, many others, go to YouTube. Jeff Barton, the Mortgage Voice on YouTube. That's Jeff Barton, the Mortgage Voice on YouTube. And if you want to see me, you can go there and you can see the guests and you can comment and join the club. And there are many reasons why you want to go there, because the archive shows, and there's hundreds of them, give you a perspective of what's going on, not only this week, but last week, last year, and 10 years ago. Yes, that's right. Hundreds of shows on there. You really get a perspective as to what's happening. We divide this show up pretty simply, right? I talk a lot about what's going on in the macro, about what's going on in the world, things that can make your decisions easier or harder. And then we bring on some terrific guests who talk about product, who talk about mortgage loans, different types of mortgage loans, and the specifics about what's going on in this neighborhood, in this particular hood, which is the Inland Empire. And that's where KCAA, our radio station affiliate, is out there broadcasting to you, as I said, on Saturday and Sunday, bringing you the news to use, as well as a lot of other opinions that we try. We try to stay away from a lot of opinions, but certainly when you're prognosticating what's going on with the economy, with interest rates, how the real estate market is going to be, a lot of it's guesswork. It's educated guesswork, as my 30-plus years in the business will attest to. But again, nobody really knows. And I think when talking about things like the mortgage interest rates, what are they going to be? I think what we talk about mainly is to try to tell you, is it something that you can pay on a monthly? And can you get your arms around that monthly payment? And there are fewer and fewer people who can in certain areas of the market. Now, we talk about that, whether it's the single-family home, whether it's condos, whether it's new home construction, whether it's existing family homes, or whether you're competing against large corporations trying to buy those products as well, and why that may not be great for the economy. Anyway, again, I'm Jeff Barton, and this is the Mortgage Voice. Let's get right to it and talk a little bit about what's happening with the mortgage interest rates. 30-year fixed rate loan right now is 6.9%. That's right, 6.9%. So it's risen almost 0.4 of a point since last week. And that's a lot. That's a lot. And when you're out there and you're pinching pennies to try to get together whatever your mortgage payment is going to get, and you suddenly realize that your mortgage interest payment on a $400,000 house has just gone up another $250 a month, that may put you out of the running for that particular property. But you've got to talk to somebody before you even enter into any of this, so that you can get a reasonable approach towards what you're looking for when either the prices fall to be able to match the amount of money you can pay on a monthly, or the interest rates fall so that you can match the amount that you can pay on a monthly, or both fall. That's kind of what we're talking about for the rest of the year. We will see some of that in some follow-up that I'm going to do here on the show. The 15-year is at 6.29%. FHA is, of course, at 6.20. That's a pretty good loan. Now, again, you have to add in the 1.25% that you're going to have to pay on a yearly basis currently for the life of the loan, which is the insurance premium. But you've got insurance on the property, and that 6.2% rate means that your overall rate will probably be around 7%, 6.89 to 7.12, somewhere in there. But again, you do have insurance, and that's a great deal of relief for a lot of people, especially if you're in one of those industries that's feeling the pinch right now, which is layoffs or which is all kinds of other things going on in the marketplace to make people nervous. Bank of America came out a couple days ago and said, hey, look, you have to come back to work. Now, there's a lot of hybrid people who are listening to the show, who do listen to the show, who love working from home. There's a lot of advantages to that. Obviously, childcare issue is the number one. If you've got little ones at home and you can't really afford to pay both the mortgage and childcare, working hybrid, working from home is really the ideal way to go. But Bank of America, nope. Moynihan said, come back to work or face penalties. Now, we don't know what the penalties are going to be, but this is one of the biggest corporations in America, Bank of America, saying that. There are some other companies who have gone the other way and said, no, hybrid is the way to go. I think in the mortgage broker industry, for those of you out there looking to talk to a mortgage broker, most mortgage brokers work from home because the actual broker can't afford a big office space like they used to have 10 and 15 years ago, even 4 and 5 years ago when they used to pack in, 35 to 50 loan officers into a big room, kind of like the big bullpen that used to be in many businesses, whether it be the print media, whether it be television, whether it be news, whether it be the mortgage industry. There used to be a whole room full of people sat around, and there was a lot of collegiality, a lot of water cooler stuff, and it was great for morale in the company. But that's not really happening in the mortgage industry anymore, as is in any of those other industries. Anybody who's listening and paying attention to the layoffs happening all across all kinds of media, LA Times just laid off 20% of its editorial staff. This tells you one thing about the rage in the stock market. AI, yes, that's right. Artificial intelligence will be writing a great majority of the articles in many periodicals, newspapers going forward. Now, there is a number of drawbacks to that, obviously, but one of the positives is that it saves the paper a ton of dough. Now, is any of that worth reading? Well, that's interesting. I have friends who talk about the way media is manipulated anyway, and whether you believe that, or whether you believe, as many do, that the election was stolen, or if you believe, as many do, that aliens are out in Area 51. The manipulation of what you read and see and hear is really astounding. So getting rid of people and replacing it with artificial intelligence may not be the way that I'm going to get my news. All I know is that in the financial news that we get out there, the news that we talk about, or we're going to talk about in another segment on the show, is always revised. And we can bet that anything that is written in either the LA Times, the New York Times, or any number of periodicals, as well as what's going on television in the news world, never gets revised. They may run a little bit of a blurb about what happened, and it may not have happened exactly as we reported it. But in financial news, you know exactly what happens, and when they make a mistake, they know you're going to know that they did make that mistake, and they're going to come out with a rebuttal to it. We had some news today that came across the wires about the gross domestic product for the U.S., what it did in the fourth quarter, and how it affected the year. Gross domestic product, and it was quite a bit of a surprise, and the surprise to the upside, i.e. that the GDP rose in the fourth quarter. It came in at 3.3%. Now it's down from about 4.9% in the third quarter, but up from the projections of 2%. Now, I know, and I'm going to tell you right now, that 3.3% GDP number is going to be revised probably downward. Right? But it's still a lot better number than they were thinking about it, which means that the Fed will probably not lower interest rates in March. That's what it really means. And what does that mean to you as the consumer? Well, if you have any money invested in the stock market, it means that the stock market's not going to go up. Because if the Fed lowered rates, stock market goes up. That's great for retired people. And why is that great for you as a homeowner in their 40s? Because if somebody is doing well in the stock market, they're more than likely to look at their home as an asset that they should cash out and maybe put in the stock market, or have less fear that a higher interest rate on their mortgage if they went out and bought after they sold their current home and moved down to either a condo or a single family home with one story will be okay, and they'll be okay. So all of these things are interrelated in terms of how you're going to make your decisions. We'll get to a little bit more of it, as well as what's happening in the jumbo and the 5-1 arm. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. We bring to you each and every week the best information and the most up-to-date information about not only programs, but what's happening in the real estate world. We give a macro and a micro. Our next guest is Connie Hernandez, who brings us the best micro in that area out in the Inland Empire and West Covina area. Connie, how are you?
Fine. Thank you for asking, Jeff. Hope you're well.
I'm okay. Yeah, it's kind of a tough start to the year. I mean, I thought we were going to see interest rates really start to go back down, and then all of a sudden this week went back up by almost a half a point. Kind of disappointing.
Very disappointing, right? Because we're being, I guess, told by so many different sources to look for those lower rates, and they have not happened.
Yeah, I don't really understand it, although I rarely understand how mortgage interest rates work. It's a lagging indicator anyway. Mortgage interest rates are not really indicative of what's going on either in the economy or in the bond market, because the bond market, really, we've seen a tightening of the 2 and the 10, so your guess is as good as mine as to what's happening.
You're absolutely right. It's just kind of the wild, wild west. Is that the best way I can put it?
Yeah. How is your business, and what are your buyers saying in the real estate side?
Well, I have a lot of pre-qualified buyers in the pipeline. The only thing is that, a lot of these clients had put a hold or temporary hold because they were expecting to be able to get better interest rates.
Sure.
And they're still out there looking at property. I mean, there's, we have a real estate side division, and the listings that we're still getting multiple offers, but most of the listings that are actually moving are, believe it or not, Hesperia, like Elsinore,
sure,
Marietta, those areas. Not much is moving in any of the areas like the San Gabriel Valley.
Right.
Things are kind of holding tight. I think people are hoping that one or two things will happen. Either we truly do get those lower interest rates so they could move forward with their purchases, or prices start dropping. I did notice a slight drop in the LA area. I'm not sure if you noticed that, but seeing some of the values drop a little bit more, like I would say like Crenshaw, Southgate. I noticed some of like the 1 to 4s have dropped a little bit in value. Not so much the single family, but the 1 to 4s.
That's interesting you say that. I mean, obviously there are predictions, but I never know whether it's they're trying to tell everybody that it's happening, and so then they sort of talk everybody into lowering the price, or is it really happening? Because sometimes, the prices just don't match up what I'm reading in any of the blogs or certainly online.
Well, I'm thinking that part of the reason why some of the 1 to 4s are probably selling, and more so in certain areas, is, some people are wanting to move out of California and reinvest somewhere else. I've done quite a few pre-quals for Nevada, Arizona, Texas, and these are people that are selling properties here in California and moving out of state.
Well, the property values here are just out of sight. I mean, as much as any place in the country, it's expensive to live here as it is anywhere. And so selling here and going to buy, and as you said, in Arizona, I guess, is one of the places that you would go. I would think it's more in the middle of the country, a little bit more, that'd be cheaper. I was looking at the top 100 cities around the country where you could buy under $250,000. Now, there's not a lot of cities you recognize, but there are certainly places out there that you can do that. And because California prices are what they are, you could probably buy more than just, a good house. You probably buy the best house in the neighborhood in those particular cities.
Yes, but you know the ever ending question for people leaving California and why we stay here, the weather, right?
Right.
At the end
Well,
of the day,
that's
it's the weather.
that is absolutely the truth. I mean, you see Buffalo buried in snow. Not that I would ever move to Buffalo, at least not now. But when I was younger, I lived in that part of the world, and man, it was cold and snowy all the time. Couldn't wait to get out west. So I agree with you there.
So yeah, we bear and grown it. You know what we deal with the real estate and the economy, and one of the things I think that are really important to kind of look at is our food supply chain is being affected right now, and eventually that'll affect us, right, on the real estate.
Yeah, I think there's a lot going on that we are just a small piece of. Let's get into the loans a little bit now. Tell me some of the products that are available, hot. What are people going to? Is it the non-QM world? Is it FHA now? Is it more of a buy-down kind of market? Where are we?
It's been years, quite a few years since anyone asked for the buy down and was willing to do the buy down because, the buy down comes with, its pros and cons, of course.
Sure.
But that is definitely something that I'm getting a lot of questions on. They want to explore that option.
Mm-hmm.
All of us want at least to go into a property with a lower payment, right? I mean, you
Mm-hmm.
understand, hopefully, and I think that's the quote unquote, hopefully,
Uh-huh.
before they actually hit the higher payment mark, the rates will adjust and they'll be able to do a refi is I think what everyone is anticipating right now. And I'm actually getting a lot of questions on jumbos, adjustable
Huh.
jumbos.
Okay.
So everyone's looking for that lowest possible interest rate, even if it's on a temporary basis, expecting that the rates will adjust.
What are the disclosures on that jumbo adjustable?
I'm sorry, what do you mean by disclosures?
Well, what are you telling people? I mean, somebody says,
Oh,
okay, I want the lowest payment. I've got a jumbo loan. And you say, okay, I've got this particular option. Are you telling them about, the horror stories from back in the day of
yes.
2000? Yeah, exactly. Okay, I was just saying, because I know a
Yes,
lot of people got burned
absolutely.
big time on those loans.
Absolutely.
Right.
We have to because, the thing again is the big question and why they're asking is it a good idea? Because, everyone's talking about the interest rates going down. And I
Right.
have to tell them, you know what? If I had a crystal ball, I probably wouldn't be here right now.
Right. I'd have a different career. Right. Exactly.
Right. So to answer their question, I have to tell them, you have to do what's best for you, for your family, based on your financial situation. If I always tell my clients, even back in the day when we had those horrible loans, there's many people that I basically told them I could not help them because I knew what would be coming for their particular situation on a
Right.
fixed income. I mean, there's people that those types of loans may work for, where they actually have a bit more control than a W-2 borrower, and they have the ability to generate more income. They're self-employed or they own a business. Those are not as scary, but right, really across the board, everyone really has to look at what's my ability to keep reserves in the bank.
Sure.
And once my payment adjusts, is that something that we're going to be able to handle financially? And, in some cases, a few, but there are out there, we tend to spend a lot of money. And once you go into purchasing a property, you have to adjust your spending habits. And those of us that can adjust the spending habits do okay. Those of us that it's too difficult to spend, to change those spending habits, that's when you kind of start seeing issues or problems with charge cards and, getting into debt more than they can handle. And those are usually the tough ones. But
Yep.
overall, yes, I definitely always disclose with them what the worst case scenario could be.
Sure.
And are they willing to and are able to adjust to those changes?
I think disciplined borrowing is probably, very key to any borrowing regardless, but certainly on something that's adjustable. You got to look at it and say, okay, what if in several scenarios, are we comfortable with doing that? And, can we sell the property if in fact, the market goes down? All these things are options, especially if you can't make the payment. But yeah, it's a very serious, decision to make, obviously.
Absolutely. And at the end of the day, well, I believe you and I are still here because we do definitely inform our clients.
Uh-huh. That's
Uh,
true. It's very true. You got to inform. Connie, we're up against it. Hey, could you do me a favor and let people know how they can
sure.
get in touch with not only a terrific loan officer, but also a great realtor out there in the Covina area? Thanks.
Thank you so much, Jeff.
Sure.
Yes, you can reach us at area code 626-422-2017. That is my direct line. Office line is 626-918-2419. We're happy to answer any questions for anyone on any particular loan programs or real estate questions. We're in downtown Covina on 101 North Citrus in Covina. Thanks so much, Jeff.
Thank you very much, Connie. I appreciate that, and we'll talk soon.
All right, take care.
Thank you. That's Connie Hernandez from PMA. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show, listening to us on each and every week that we come to. KCAA is our radio station out in the Inland Empire. In the Inland Empire is San Bernardino and Riverside counties, almost from the beach to the mountains. And if you're in between there, you could probably catch some of our shows on Saturday and Sunday. You can certainly go to YouTube, Jeff Barton, The Mortgage Voice. You can go to our website, themortgagevoice.com. You can see us, as I said, on those two areas, as well as we got podcasts, and as I said, the radio station, KCAA. So a lot of different ways that you can reach what we do, and we've been doing it for a long time. We bring all kinds of different perspectives to the show. We kind of bring a national, a local, and expertise level. I'm on the BS level on the first two, and the expertise are the guests we bring onto the show. And Brenda Scott joins us now as one of those expertise as a mortgage broker for many years, and she joins us now. Brenda, how are you?
I'm good. How you doing?
I'm okay. Thank you very much. It's
Happy New Year.
Happy New Year. Yeah. Happy New Year to you. Okay, Brenda, now I know you have a new place that you're working. What is the new company, and where do you centralize your...
It's Summit Lending, and we are out of Huntington Beach, California.
Oh, yeah, I know Summit. They're a big company, been around a long time.
Yes, has been a long time.
And what kind of loans are you specializing in with them, or is it the same stuff that you've been doing all along? You just satisfy the client's needs?
Stuff we've been doing all along. A lot of the bank statements, profit and loss, especially. There's some really good programs out there for self-employed people. I mean, excellent programs with good rates, good terms.
Okay, excellent. Let's talk a little bit about those programs. Are they like bank statement programs? Are they ITIN programs? Are they?
Yes, they're bank statements program. You can use 12 months bank statements, and it's the same pricing as 24 months bank statements. You can use profit and loss if you're self-employed. It's still a good industry out there, and there's still a lot of good programs out there to help. There's first-time home buyer programs that's coming back out pretty good. Shafa has a good program that they're establishing. So it's still a good market, and it's still a good time to buy.
Okay, so it's interesting that you say that. Now, in the real estate world, we see a little bit more inventory on the market, which is a good thing, obviously, right? Obviously, more houses.
Oh, yeah. And I'm going to tell you, a lot of these houses are coming on the market. They were investment properties, and now these investors are now saying, hey, we don't want to be renters anymore or landlords anymore. Right. So let's put the house on the market. So I'm running across a lot of those type of transactions.
That's interesting. Now, you work all over Southern California. Where have you seen the biggest increase in prices or biggest increase in number of houses for sale?
L.A.
L.A. Okay.
Believe it or not,
yep.
L.A. Yes. Certain zip codes, but yes, a lot of them are coming up in the L.A. area, the 90001 area code, 90040 code, Commerce, a lot, Southgate, a lot of these companies, a lot of investment properties are good on the market.
You know, you're the second person today who's talked about Southgate. Tell us a little bit about that area, because I'm on not...
Southgate is absolutely beautiful.
Okay.
Not a whole lot of, you don't see a whole lot of real estate signs there, but when they come out, they come out big. It's right in that Los Angeles area, not too far from downtown, about 30 minutes from Pasadena. That's a good area. That's a very good area.
Yeah, it is a good area. Now, the radio show reaches that particular area, especially if the wind's blowing the right way that day. So, no, I'm not kidding. I mean, we're that's very funny. Okay, so, all right. And now a lot of these programs you're talking about are those non-QM programs, and the rates of the non-QM are traditionally a little bit higher, except in certain loan products, right?
Absolutely. And even if the rate is higher, I mean, I know it is what it is. We can't change that.
No.
But you can always opt to do an interest only for 10 years. So between now and 10 years, you're going to do something with that property. So why not? Why not do an interest only? Why not have your taxes and your insurance impounded? Because it's going to raise your payments up higher because the interest rates are higher. So maybe I'm saying, don't do impounds this time around. Wait till you refinance, get that rate lowered, then pop it in on the impounds, because it costs you more money when you impound.
Absolutely. Tell us a little bit more about these interest-only payments, because that really would perk a lot of people's ears who are thinking, what do you mean? I only have to pay the interest?
Yeah, you got an interest only. You only pay, I'm just giving you numbers. If your mortgage payment is, $4,300 a month and you do an interest only, that may bring your payment down to maybe $3,600 a month.
Right.
With no taxes, no impound. But you still can do that. I mean, you do that for 10 years. So for 10 years, nothing happens to that loan until you get ready to refinance. There's no balloon. It's strictly fully amortized.
Right. And the best part about that is that along the way of those 10 years, you're probably going to see rates lower than they are now, and maybe your financial situation is going to be better too.
I would almost guarantee you that it will change. Rates anticipating on dropping a tad bit sometime this year. But, hey, just like I tell everybody, you can't wait on the rates to drop. If you want to buy, you need to buy now, because when rates start dropping, guess what? Pricing is going to go up, and it's going to be a hell of a lot more competitive.
Well, that's interesting you say that, too. We've seen, as I say, a little bit of an uptick in the inventory, but as prices... as the price of your loan goes down, obviously the competition for properties that are on the market is going to go up because more people can afford it now.
Absolutely.
Right.
Absolutely. So I tell the first thing is this a good time to buy? Why? You're going to wait till, the market goes up and
right.
you got 10 people going after one house? Buy now, refinance later.
Well, I think now in this market, you've seen sellers be a little bit more willing to either drop price or do a buy down or help out a little bit more.
Oh, absolutely, right. Jeff. That's good you bring that up. Yes, sellers are willing to pay for a buy down rate. They're willing to pay for closing costs.
Right.
Some of them are doing termites. Some of them, they're doing a lot more than, hey, we're not doing anything but selling the property. They're being a little bit more, they want that property sold. So if you want it sold, you got to give me something too.
Yeah, no, I think that's absolutely true. I think sellers in particular, are a little bit nervous about what's going on with the economy. I just was reading, I'll read off a list of a few of these companies that are laying people off. Whole Foods, Tyson, Walmart, Morgan Stanley, Gap, 3M, Lyft, EA Games, Sirius FM. They're all laying people off, anywhere from 1,000 to 3, 4, 5, 6,000 people. That's scary news to people who are obviously working at those companies, but it scares those people out there who are thinking, hey, what's the truth? Is it the economy's doing great, or am I to look at all these layoffs and say, hey, should I be in trouble at my job? I think that's why sellers want to really try to sell their house now, be a bit more flexible in the price or what they give up, because you just never know in the economy.
You never know. But you
right.
know what? You never know with anything. I mean, even if there's not layoffs going down, there's still a possibility for something to happen that will cause you to say, maybe I'll wait a little while. I think this is just as good as time to do it now than waiting. And I do. There are a lot of people that are being laid off. But even with those people laying off, they have homes already. Most of them have homes already.
Right. And I think if you're working, you're not worried about layoffs because you know what's going on at your particular place. These companies I mentioned here, they're all national companies. Most people work at small businesses. I mean, even Summit's a local regional player. I mean, so I think to be able to take advantage of whatever market you're in, you have to be willing to say, okay, I'm going to do it right now, regardless of the market, because your confidence in your own self is really what's mattering here.
That's really what it is. So as long as you're renting, you're paying somebody else's mortgage, they dictate to you how much your mortgage is. You know, obviously we have caps now that they can't increase the rent. But, hey, why pay somebody else's mortgage when you can pay your own doggone mortgage and do whatever you want to do to your own house, you know?
Absolutely. Okay, we're up against it. I want you to tell people how to get a hold of you, Brenda Scott.
I can be reached at 562-500-2400. Again, that's 562-500-2400. Call me. There's no cost for consultation. If you have any questions, I'll be happy to answer any questions you have.
Excellent. Brenda, thank you very much. Always enjoy having you on. It always brings a smile.
Thank you for having me. Thank you. Have a good day.
You too. That's Brenda Scott from Summit Mortgage. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show. Once again, every week we come to you. We bring you information about what's going on in the purchase world, maybe in the refinance world. We talk some national economics and how that might affect your decision making. Certainly there's a lot going on. This is an election year. Everybody's going to be a little bit crazy talking about things that they know nothing about. Reminds me of many things that I do all through my life, talking about things I know nothing about. One thing I do know about is the mortgages, mortgage rates, mortgage programs, and we talk about most of that here on the show to be able to help you in your decision-making process, whether you're going to buy, sell, refi, whatever it is that you're going to do. Now, the people with the real expertise are the people I bring on as guests. They bring us the micro, the expertise on loan products and everything else. With us from 11 Mortgages, Karl, and it's his first time on the show, and I really appreciate him coming on. Paul, how are you?
I'm doing good. Thank you, Jeff.
Thank you.
Appreciate the invite.
Oh, no problem. I really like having account executives from the different companies on because really you've got the boots on the ground. You really know what products are hot, what's being used, and certainly what your different companies are out there doing to help buyers into a new home purchase. So I'll just begin that by saying, hey, appreciate you coming on. Tell us a little bit about what is happening over at 11 Mortgage.
Well, I mean, 11 more. I mean, at the way wholesalers go, unless you're doing non-QM, you're all dealing with the same products.
Right.
Your Fannie, Freddie, FHA, USDA, VA, those type of deals. And so the trick is, how do you do it better? And we've come up with a couple of ways at 11 that I think are. If they don't help the borrower as much now, they will in the near future if values kind of top out and stuff like that, because we've eliminated the AMC. One of the problems that I saw with the industry was that the appraiser who really makes or breaks a deal was getting cut out of half of his fee by the AMCs.
Okay.
And you were getting substandard appraisals. So what we do is we allow the broker to choose their own list, or we choose it for them. The appraiser makes the whole fee and is a lot more helpful during the process. Doesn't just do the appraisal and walk away and not feel like they have any more time. So we have a department for the appraisal department. We have a department for our condo management. So if somebody's going into a condo, they want to know, is this approvable FHA? Is a spot or a full? Is it approvable VA? So we hire experienced people. Like, I've been doing this, I don't know about you, but I've been doing this 34 years as a wholesale account executive. And before that, I did your job as a real estate broker, as a loan broker. So all our underwriters are cross-trained in conventional FHA, so they problem solve, So that, to me, is the main thing. Unless you've got the straight cookie-cutter borrower,
right?
The ability to be agile. And this is where a broker is more advantageous than, say, a loan agent who's got one bank to send a loan to. A broker has multiple lenders.
Right.
And each of your lenders has multiple investors. So, we are going to try to find a place for your borrower, just like you are searching for the best place for borrowers, and giving them choice. I mean, it's kind of funny. I worked for my dad, who was a mortgage broker.
Okay.
And he worked for Home Savings and a couple different things. Then he went off on his own and did mortgage brokering. And the SNLs said, we're going to be the death of mortgage brokers. And since then, countrywide, going to be the death of mortgage brokers. Was it Steve Dallas said, Bill Dallas said, his company was going to be the death of mortgage brokers. The mortgage brokers is never going to go away because they can regulate costs in such a way that they are going to provide the best service for the lowest cost. So if you get into a price war with a mortgage broker and you're a bank who has branches or offices, you're going to lose every time. Even if they have an office, trust me, that office isn't costing half what a branch for a bank is costing them, and somebody's got to pay for that. So
absolutely. Okay, let's get to a little bit specifically about some of the products that you really like that they're offering at 11.
Well, let's see. One of the ones for California is CalHAPA.
Sure.
So they're doing, their regular product is like a 97.3, 100% combined.
That's a down payment
LTV.
Assistance program, right?
Right.
Okay.
And you don't make any payments on the second. You just pay 1% on the second.
Right.
When you pay it off. The one product that seemed to catch fire last year and is coming out again soon is Dream for All, which is a shared equity product.
Tell us a little about that. I read some about it. It was a bit confusing because I didn't really understand the either the properties being sold or refied, how that shared particular equity works.
I mean, basically, they get so you put down 80%, they put down 20%, or you put down 80. I mean, you get a loan for 85%, and they put 20%.
Okay.
To help cover costs. Now, that 20%, they're going to want that back in the form of when you sell the property. They're going to want their money back, plus you don't pay an interest rate on it. You pay shared equity. So you pay whatever the property is appreciated.
So if the property goes up $100,000, you get $20,000, they get $80,000. That's what you're saying. If that's what the equity is in the property, 20% versus 80.
Right. Well, if there's $100,000 appreciation, they get 20.
Right.
The borrower gets 80.
Right.
So.
Is it popular?
There's a couple negatives there too. What
of course.
If it goes up $100,000 in the first year? then you're paying a hellacious interest rate for that 20% second. But, if you couldn't buy that, it's still for a person that is lacking funds. And,
Right.
For the first, you're going to get no MI. So, you're going to have lower payments.
So the shared
And
equity sorry about that, but the shared equity is an adjustable loan? That 15% that they lend you, or is that a fixed rate loan? Like the first would be?
It is zero interest.
Oh, okay.
The interest is the shared equity.
Right, of course. Yeah, of course.
So that can be 0%, or it could be, a hellacious percentage, depending on how soon you pay it off and how much equity there is.
Right, but this is designed really to get somebody into the property and have them either refi in the next year and a half, 2 years, so that particular aspect isn't. Now, when they refi it, what do? Appraise the property, and whatever the difference is what the shared equity is? I see. Okay, so that's very, very interesting.
So it's an interesting product, but it has its ups and downs. You really got to think about your situation, like you said. If you think you're going to refi in a year, is it the right program? You got to weigh the cost.
Right,
because they don't, if you put money into the property, right? Say you're going to buy a property and fix it up. You'd never do a shared equity loan.
Right.
Because you don't get to deduct that off the top.
Right, like you would on your taxes if you sold it, right? I mean, you would say, hey, these are the capital improvements I made off the basis, and this is what I owe taxes on. No, I understand that. We are, oh my gosh, look what this, all right, we're about at the end of our time period. I want to have you back to continue the discussion about what's going on at 11, but we're out of time. You want to leave people a place which they can get a hold of you, maybe a phone number, email, both? Yes,
if you want to get approved with 11 Mortgage, give me a call, 818-535-0080 is my cell number, and you can reach me anytime.
Paul, thank you very much for coming on the show. This was fun. You have a lot of information, good stories. Appreciate it.
Yeah, and I'm happy to come back anytime.
Thank you very much. That's Karl from 11 Mortgage. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, for listening to us each and every week. We come to you on many different ways, whether it's over the air on a radio, you're driving around, or you're at home on your radio. We come to you through our website. That's themortgagevoice.com. YouTube, we talked about, but also podcasts. Yes, we are in the podcasting world. Daryl, do you have a list of those for us, please?
I sure do, Jeff. I've got Apple Music Play, radio.com, Spreaker, Stitcher. We've also got podclips.io and themortgagevoice.com.
iHeartMusic, were you on them anymore?
Yeah, oh yeah.
Okay, excellent. So as you can hear and see, we're on all the majors. And podclips.io, I'll give them a quick plug here. Great place to centralize all your podcasting needs. If you go to podclips.io, you can hear about the health, financing, sports, lifestyle, and alternative dispute resolution. And that is a new one, but a good one. And why I say that is because in our business, whether it's mortgages or real estate, always disputes on some aspect. If you want to not go to court and pay huge fees in lawsuits, usually you go to these EDR people. You go to these people that can mediate or arbitrate those particular disputes. And these people are it. Anyway, I'm Jeff Barton. Is that right?
Yeah, I was just going to say that Len Levy, the host of the show, is just incredibly smart, intelligent, informed, and does a great job.
Excellent. Okay, excellent. Fine. We should have him on one time. Just talk to him about what's happening in that world.
I could imagine that could happen very easily.
Good. I think we know that. I know the guy that knows the guy.
He knows the phone number.
Yeah, excellent very much. Okay, well, thanks very much for tuning in, everyone. I really appreciate it. We were talking earlier about some of the things that were going on in the economy that's affecting a lot of different, there's a lot of moving parts, and always are. And I always come to the show in an emotional state, as you do to your job every day. And when you come home from that particular job, and if you have a family, or if you're by yourself, or if you've got pets or kids or spouses or whatever is going on, there's so much packed into the emotion of that day. You come home, you try to share it with, and then to try to figure out, okay, we want to one day get a house. How can we afford it, and what are we going to do to get it? Whether you're old, whether you're young, it's something that requires a lot of mental power, a lot of effort to be able to think about it. And I, too, think about this quite a bit. I mean, I'm of the age where we have to think about wills and trusts and way to leave things. Now, it's not huge amounts, but you want to protect it, and how you do that, and what you're going to be doing in the future to be able to pass this on to the next generation, who are my children, or your children, or your friends, or whoever you do pass that stuff on to. And again, it is daunting to think about the amount of intellectual power that has gone into escaping taxes and to be able to provide for people in the future. If you're there and you know what I'm talking about, I feel for you, because as I said, myself doing the same thing. One of the things that we did with our home is we put it in a trust, meaning that the corporation, which is the trust really, is the one that owns the property. So the people who would get that particular property when my wife and I passed on or died would be the people who were controlling the trust. They would either be the trustee or the person who had the trustee as the beneficiary. Now, as a result of that, there's no transfer tax. There's no way that property can be taxed. In California, it's a big bite if you don't do things like this. Now, there is an estate that you have, or your spouse and yourself have. I think it equals up to about $12 million that you can pass automatically tax-free to whoever you want. As you figure that out, and in California, I mean, even if you have a small bungalow in the middle of the desert, it's probably going to be worth in 10 or 15 years very close to that, $2 or $3, $4 million, piece of land, whatever it is. You might have a sizable estate. So thinking about this thing, thinking about how you're going to pass your particular property and your house and the money you have to your kids or whoever you want to, that's something that requires a lot of thought and a lot of thinking. I bring that up only because there are a number of things that you can do to fund those assets that you're going to pass on. You got a house right now. You're in your 70s. You've paid off the house. It's worth, $3-4 million. Anything along the coast, really close to 50 to 75 miles from the coast, is probably worth millions of dollars. I mean, let's just face it. There's a great article that came out a couple of years ago called The Millionaire Next Door. It talked about property millionaire rich people. They may not have it in the bank, but they have it in their house. And if you're like me and you're of that age that I just mentioned, you've probably paid that house off, and therefore you're sitting on this. To be able to set something up, to be able to fund something, to be able to take that money and use it or pass it along, all of these things are ways by which you can do it. And when I say that, I mean the trust accounts that we were talking about, the expertise that's needed to do that, the ability to be able to think it through so that you can rest assured that Uncle Sam's not going to dip in. Now, I talk about this because I read today, it was kind of an accidental read. It was about a guy here in California, so it's a local guy. He moved here from, I forget what state, Chicago maybe, and has lived here his whole life, moved up north, and bought a place and loved the place. There was 10 acres, had a little water on it, had some great natural beauty to it, wanted to build a house, and went to build a house. The gentleman's name is George Sheets. His particular case that I'm going to talk about is in front of the Supreme Court of the United States. And one of the things that he did, and you might think about this, right? You want to build a house. You want to, like I was saying, you take money out of the house, you sell the house, you put it in trust, you take some of that money and you build something up in Northern California like George does. Went down to the local building, the building and safety department of either the county or the city that he's living in. And he got the permit. I think it was a manufactured home he was going to put on there. And they wanted to charge him $23,000 in fees above and beyond the permitting itself. And he said, oh, what do you mean? And he said, well, these are called, let me get this right, these are, this is called traffic impact fees. Anybody out there building a house knows what I'm talking about. The fees that they tack on, and you, when you get your property bill at the end of the year, this is also another point of contention. You will see things on there that you have no idea what they are. And this is what we're talking about when government interferes with either passing money from you to your kid, and you have to do all these jumps and hoops to be able to do that, or you're trying to do something like build a house that you've already, you retired, you're going to build a house, and George Sheets ran into a $23,000 bill. So he paid the bill in order to build the manufactured home on his property. However, he sued the city, and he sued the city because he said, wait a second here, I don't have anything to do with traffic impact fees. I just got here. What are you talking about? And they said, no, this is just the way you want to build. You have to pay the traffic impact fees. And he said, no, this is nothing about traffic impact fees. This has more to do about raising, using the permitting process to raise revenue. And he sued and lost, and he appealed, lost, and the Supreme Court has decided to take up his case. Now, government's overreach in terms of their inability to manage their own money, i.e., I need to do something because it's my turn in government, so therefore I'm going to obligate future generations with my giveaway to whoever it is they give away. That's his argument. He's saying, look, I shouldn't have to pay for the mistakes of government by borrowing too much in the past or overreaching and wanting to do more now with some trumped up thing called traffic impact fees. So keep this in mind. The guy's name is George Sheets. He's suing. It's in front of the Supreme Court, and it's a very interesting case because like a lot of things happening nowadays, there's a lot of pushback on government overreach. Whether you're into politics or not, a lot of this particular cycle is about, hey, wait a second, leave us alone. Now, I'm of a great mind to say that, except I don't, there's so much greed out there, it's very difficult to understand whether someone gets a tax bill, whether they're going to pay it or not. Is it a legit tax bill? Is it not a legit tax bill? That's one story. But if you do have income tax to pay, there's another great article on Ronald Reagan and his legacy and trickle-down theory of economics. Anyway, very, very interesting out there in the big world. I'm Jeff Barton, your voice in the mortgage industry. Appreciate you listening to the show. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.